You mentioned M&A. I'll point to IPO activity, also interesting, and the most interesting IPO is yet to come this summer, Alibaba.
Yeah.
What are you going to be looking for as that issue hits the market?
I think what you want to see is people's reactions. It is a real business with real margins. I find the other businesses and what's happening there really interesting. And M&As are a great way to see how corporate America is thinking and the risk attitude. The premiums being paid for takeovers, 20, 30, 40% for companies that have already gone up 100%, suggests that something's changed in corporate America. They can't find organic growth, they're acquiring growth, and they're using very cheap debt to do it. And the spread between high yield debt and government debt has not been narrower in our lifetimes. So there is such a risk squeeze out occurring in a hunt for yield that if the economy were to slow down, it could create a lot of ugly surprises, hedge fund failures, a lot of more expensive debt, refinancing would be a problem. And that's frankly where I'm most concerned. I don't think it happens in the shorter to medium term, but I think that's what you want to watch, is what happens with this continued takeover activity. How's it being paid for?
When you mention hedge fund failures, are we removed, though, from systemic risk in the markets? Have we developed the right safeguards since the last crises we've had, that if there is significant turmoil, there would not be a broader fallout from it?
Nothing has changed. No. No, I don't think that at all. I don't think that any meaningful...
Well, Dodd-Frank tried to do a little
bit. A little, but there hasn't actually been a reform of the risk. Now, I will say the balance sheet of the banks are not going to be the problem. But the off-balance sheet investments that these hedge funds have, trillions of dollars, they aren't being regulated. They are not looking and saying, what is, like another long-term capital, could it happen? Absolutely. Who knows which mega large hedge fund is investing in debt with a lot of leverage that is not regulated, not even really reporting what their positions are. And the people who can see the positions don't even understand what the positions are. So no, I think that there's very possibly high potential for a failure that could be a problem. Now, I don't think it's one of the large banks because their balance sheets are in a remarkably different position than they were. That has changed.